Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. There seems to be an endless stream of get-rich-quick schemes, which is kind of surprising because I'm not sure I've ever met anyone getting rich quick using one of those schemes anyway. Investing is almost always a long-term game, and anyone laying down their hard-earned cash should familiarise themselves with the different rules of investing and the associated risks. Importantly, don't believe the hype around an investment. If it sounds too good to be true, well, it probably is. The corporate regulator, the Australian Securities and Investments Commission, last week launched a consumer campaign to raise awareness of the risks associated with investment hype to coincide with the Australian release of Dumb Money, a new film about the GameStop short squeeze episode a couple of years ago. It provides an opportunity to have a chat about investment scams with Calissa Aldridge, Executive Director of Markets at ASIC. Calissa, welcome to Fear and Greed.
Thanks, Sean. I'm happy to be here.
So just very quick, for those who don't know the GameStop story, because it's kind of an interesting tale, very briefly, what was it exactly?
It was a story about hype, I guess, at its essence. A number of retail investors who got together and decided that hedge funds and others had taken two bigger short positions against a company called GameStop, and they decided that they would try to push up the price of that stock, which would mean that those hedge funds would essentially be squeezed and force them to purchase back the stock at much higher prices, which is the outcome that they had, and I think probably much more successful than they intended, with prices going up by about 2,000%.
Okay, so I sort of want to dig into that in a moment, but let's get kind of 101 here. So for retail investors, what are some of the main rules they should be following when investing?
Well, not so much about the rules, but just some of the main practices that they should be following. I think really to avoid the hype, be really careful about where they're getting their information from and what the interests of the other parties might be when they're investing. But they do need to make sure they're careful to not use information that they might have received through channels that might amount to inside information, for example. But in this case, if you're actively participating in and encouraging others to invest in a way with an intention of influencing prices, that may amount to market manipulation, which is a criminal offence in Australia.
Okay, so I mean, just getting into that GameStop detail, when a professional investor is shorting a stock, essentially they're betting that the stock will go down. And as you explained, you had retail investors, they had the ability to push the price up. How do they do that? How do retail investors do that?
So in this example, the use of social media, somebody who had a lot of followers and then they just gained a lot of momentum and they all started trading around the same time in the same direction and were able to push the price up by continuing to put orders in the market at higher prices. And as I said, the price went up really significantly, and it resulted in significant losses, not just for the hedge funds that might have had short positions, but also for a range of other investors who bought on the way up or at the top, because the price came down quite significantly and will have lost out when it came back down.
Okay, so GameStop is an extreme. Does that sort of thing happen on the Australian market?
It can. And so back during that GameStop period, we did have a range of these incidents happening here. Actually, toward the end of 2021 it was, where we saw really concerted efforts to pump and dump on ASX-listed securities, to the point that there were a number of forums on different social media channels called ASX Pump and Dump, where they were very explicit with naming specific entities that they wanted to target, what price they wanted to hit, and when they would commence the buying or the placement of orders. So it was very, very explicit. We took some action back then, which was the first time for us at the time to enter those chat rooms and provide warnings to those people who were part of it, that this is potentially criminal activity and that they need to be very careful. But also on just on GameStop itself, an interesting fact I'm not sure many people are aware of is its ticker code that you trade on in New York Stock Exchange is GME. In Australia, we have a company, GME Resources, that has the same ticker code, and we saw a significant increase in its share price because many Australian investors thought they were participating in the GameStop movement, but actually they were buying into a local resource company here. So the confusion, buying into things that you don't fully understand, that confusion resulted in losses for investors in our domestic market who bought into the wrong company.
Stay with me, Calissa. We'll be back in a minute. My guest today is Calissa Aldridge, Executive Director of Markets at ASIC. Is that sort of behaviour very prevalent. So an example of the pump and dump scams. But what other sort of scams are you seeing on the local market here?
So I wouldn't say that that's pervasive. I think we certainly saw quite a lot of it during that period of time. We don't see a huge amount of it now, but it's still there particularly in some of the smaller cap securities where there's less liquidity and it can be a little bit easier to move prices around. The other thing we've seen for a long time, but I think social media probably makes it easier, is just hyping companies and fake news. So sharing a fake news, trying to encourage other people to participate in investments, plus a range of other related scams related to financial markets. We see quite a number of what we call imposter bond scams at the moment, and fake prospectuses where they're using legitimate material, or it appears to be legitimate material, and companies that are very well known to try to encourage investors to buy into something that ultimately ends up being fake.
So in that instance, so it might be a large cap, let's call it ABC, we won't put anyone on the spot there, and they're issuing, but well, apparently the prospectus says they're issuing bonds, and people are buying those bonds, which turn out to be fake bonds, or in fact no bonds at all. Is that what you're saying?
Yeah, so the case of the prospectuses issuing different types of securities, and the bond scam ones are around buying directly into bonds. That's right. And they are very well-known companies. So there are a lot of investors who will have confidence in those companies. And even though the returns look better than investors might otherwise expect, they're not so significant that it looks like an obvious scam. So we're seeing more and more of those sorts of scams, in addition to just that constant cycle of people chasing sort of get-rich-quick initiatives. So there's a heap of scams around crypto, for example, and our data shows that there's a really significant proportion, particularly of younger investors, who do own crypto. So our survey that we ran last year for under 25-year-olds showed that 10% of Australian investors are within that under 25-year-old category, and around a third of them are investing in crypto. And many of them may be buying crypto and holding it, but many others we know are getting caught in crypto-related scams.
Okay, a couple of things there. How do you stop yourself being scammed? Are there just a few basic steps you should do if you get an unsolicited prospectus from a major bank, for example, or someone trying to sell you Bitcoin?
Yeah, absolutely. Don't click on anything that might be sent to you, or don't respond if you're getting cold calls over the phone or text messages. If you see something that might be of interest, go to the actual website and make sure you're clicking onto the original website of the entity and try to find the documentation on their websites. Look for things like phone numbers. Are they the same phone numbers? Or if they're asking you to deposit money into certain bank accounts, just check that those sorts of details look as though they're legitimate. And if all else fails, you can always try calling the entity itself and asking them if it's a legitimate offer.
Okay. What about the role of influencers? And so the GameStop is an example where they weren't even high-profile influencers, so it just seemed to gather a crowd with them. We've had people as high-profile as Kim Kardashian paying fines about promoting things which perhaps she wasn't totally au fait with. How dangerous is that, I suppose, for influencers to be spruiking investments and to be listening, or for people to be listening to those people?
Yeah, this is happening. This is happening a lot. And I think there's a range of different influencers. I think there are some, so in the Kim Kardashian example, where different people might have different views about her experience and understanding of the various things that she's spruiking. And there are others who talk very knowledgeably about the information or the products that they're recommending, or encouraging people to get involved in. And some of them might even be licensed and really have a real basis for making some of the comments. Clearly, there's been lots of really great information that is out there as well. I think during a period of time, during that pandemic period, we had a really significant influx of new retail investors to markets. And it was really important for them to access information quickly and learn about the way that markets function and the rest of it. And that's been a real benefit. But also just assume that everything that you're hearing from influencers, that they might have an ulterior motive in giving you that information. They may be paid for referrals. They may have an interest directly in whatever it is they're encouraging investors to get involved in, so they might benefit from any price increases. So I think just apply that sort of logic to any investment decisions, and always go away and do your own research. And we say our Money Smart website is a really great place to start.
Calissa, thank you for talking to Fear and Greed.
Thanks for having me.
That was Calissa Aldridge, Executive Director of Markets at ASIC. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, Australia's best business podcast. I'm Sean Aylmer. Enjoy your day.